All right. Welcome, everybody. Crypto Answered. This is our Thursday Spaces show and podcast brought to you by PennyFly Entertainment, a recent partner we brought on who's helping us get a lot more distribution as well as basically we're recording this and releasing this as a podcast a couple days after the Twitter Spaces happens. And today is Thursday, July 14th. And actually, it's a big day for me. I don't know how many people follow my Twitter that are on here. If you came from somewhere else, today is my 19-year anniversary from when I nearly died in a motorcycle accident. Broke about 22 bones and had over 70 surgeries from that. And actually did a post today talking about recovery, because right now Bitcoin is down, markets are down, but if my body can recover with how bad I damaged it, I guarantee you that this market will recover eventually. Are we at a bottom? Have we found a bottom? Will there be a bottom? Well, we'll discuss that today in today's show. Things tend to resolve themselves over time. It's just the hardest part with all this is patience. So with that being said, thank you everybody for joining us here on Crypto Answered. We've got some great panelists that are going to be speaking here at the beginning. And one of the things I wanted to do in this show, specifically also because the name of this show is Crypto Answered, I want to give a bit more of the stage this week to the audience and try to carve out some more time to where we can answer some questions, entertain some of your comments, basically just bring you into this conversation. So thank you everybody for joining us here. In today's show, at the beginning, we still will have a little bit of a panel discussion. We have some wonderful guests, starting off first with my enigmatic co-host, Mr. Dr. Harry J. Malinsky, known as CryptoVet. How you doing today, sir?
Man, I'm doing great. It's been finally a little bit cooler in Texas. Instead of 106, it was only 100 today. So kind of stay inside. Been looking at some of the charts, going over some of the Celsius stuff. So super excited to see what everyone has to say and any of the questions that everybody has. So excited to be here. Thanks, Kelly, as always. And, congrats to you, man. 19 years later.
Yeah.
Huge.
Somehow I'm still walking. People talk about how hurt I was and my body was broken. I don't think of it that way. I think of it as I have some severe body customizations, right? But you guys can follow CryptoVet on his socials. You can find most of his stuff at CryptoVet _. And he puts out a number of like quite a bit of wonderful content. He's a part of a large number and growing of incredible different blockchain based companies building out NFT stuff, Web3 stuff, play to earn gaming. There's so much stuff. He's just a super smart guy. I'm happy to have him on the team with me here. And then we also got a wonderful, I don't like to use the word influencer, but just a very smart, centered, balanced guest on. He's been on a number of times, Mr. Kevin Svensson. He's got a wonderful YouTube show. He's got there's a powerhouse of a Twitter. You can follow him at Kevin Svensson _. And Kevin, how are you doing today? And thank you for coming back.
What's up, man? I hope is my mic working? I hope it is.
It's perfect. You sound like Barry White, baby.
Thanks for having me on, man. It's good to be back. I don't even know. This might be like my 6th time on or more. So I'm really thankful that you keep inviting me on. Happy to see Jesse, CryptoVet, and of course you, Kelly. The real question is, Kelly, has your recovery bottomed out?
Well, you know what? I did what a lot of traders do along the way. This, this idea of leverage trading, where people start trading and then they get confident and then they leverage trade and lose everything, and then they take a year or two to manage their risk a bit smarter, and then they get confident again, and then they leverage trade and lose everything again. Well, I did that with my body. I had a motorcycle accident, basically was in casting crutches for 8 years. I've had about 80 surgeries at this point, and then I was an online business entrepreneur as well as doing music professionally for the last 20 years and doing stock market trading on the side. It was never my main focus, but I got a role basically where I was the music director for W Hotels in Southeast Asia, and I was out there for a year DJing, traveling around. And of course, the only way to get around out there is a scooter. And about 10 months in, I got hit on my scooter, re-broke both my legs, spent a month in the hospital in Bangkok. Basically had basically a retrace there of my recovery. So now I'm a little bit more balanced on my own personal physical health risk management.
Yeah, definitely got to set those health stop losses and stuff.
Yeah, I mean, and I'm at this point now where I think about when we were kids how reckless we were without thinking about the repercussions. Now I take about an extra 45 seconds just to gauge the distance when I'm stepping off a curb. That's just because I broke my body. But with that being said, we also got our resident sniper in the house, and I know he's doing a number of things today, juggling the world in his hands, and he has made it his quest to still be here with us today. He might have to pop off a bit early, but we got Mr. Jesse Olson in the house, and you can find him on his socials at Jesse Olson. That's Olson, not Sen. And how you doing today, Jesse?
What's up, everybody? Yeah, thanks for having me on again. Always a good show that you guys put together. All the hard work that you do behind the scenes, getting everyone on. Shout out to Kevin, all the snipers listening right now. Yeah, I'm in the middle of traveling, but my phone should be good because I actually paid my cell phone bill. Some of the other panelists may miss a cell phone bill here or there, so maybe their phones cut out a little bit more. But yeah, I think with help of your wife, maybe she'll keep you in a SUV instead of motorcycles and scooters and getting those bad crashes, especially in your older years like myself. So yeah, it'll be exciting to chat it up today. And like you said, I might have to jump off a little early, and hopefully the cell phone bill is going good today. So.
Well, absolutely. And just for everybody that's tuning in, thank you so much for joining us here. We've been doing this for it's coming up on a year here, some point in the next couple months. I actually see somebody that's I used to see him in here all the time. I think life got busy, but it's good to see Mr. Crypto RL back in here. Maybe we can pull him up and share some thoughts as well. Very smart guy. Matty Greenspan has been a guest on the show a number of times. If you have anything you want to add or just comment or debate, go ahead and request. Happy to bring you up. And for everybody that, if this is your first time, thank you for tuning in here to Crypto Answered. My name's Kelly Kellam, your host. You can find me at KELOYKELLAM. And the only reason I'm calling these things out specifically is because we are releasing this as a podcast. There's going to be a number of other channels that are away from Twitter that this will be released on, so people can find it on Spotify and Apple and all the major podcast outlets here soon. But with that being said, anybody that wants to join into the conversation, to have a comment or a question at any point in the show, on the bottom left, if you expand on your mobile app, on the bottom left, there's an area that you can request to speak. To go ahead and request. We're going to try and get as many people up here as possible. It'll be probably about 10 or 15 minutes before we start bringing people up, because we do want to go through a couple things. But when you do come up, please just keep your comment or question as somewhat concise as possible, so we don't so we're able to go through and bring up a number of different people as well. And if you have it directed towards a specific person on the panel, or just a question you want to pose in general, just let us know that. Just make sure to unmute your mic when we do bring you up. And other than that, let's just start it off here with Mr. Jesse Olson. Markets are being kind of irrational, but is that not something that they always do, right? A lot of people were thinking yesterday when the crazy numbers came in, there was going to be a huge drop, and it just shook down. Now it went up, and then it came back down. Now it's up. What are your thoughts on what's going on?
Yeah, for me, I always just stick to the charts and trade those. So, I'm always interested in what the CPI numbers come out and stuff like that. But really, the big move happened almost a month ago, and then now it's been going, pretty much consolidating for almost a month now, right? So, and if you look back before the big drop down, it consolidated for about a month or so, and before that big drop, it consolidated for about 3 months. So it kind of goes in waves, right? So it will consolidate and then it'll make its next move up or down, and you just base it off of the next move. Longer term, I'm specifically talking about Bitcoin right now, and then of course crypto is kind of following that. Ethereum looks similar, stuff like that. But if you zoom out, I posted a chart the other day. There's not a lot of maybe not everybody's a swing trader, and maybe not everyone's doing a swing trading on say lower time frames like the daily chart or the 8-hour, etc. So I put out a chart. If you're just more of an investor and you're looking at more of a long-term standpoint, you can zoom out. And I posted a month chart that I switched it to Heikinashi to make it visually easier to see the trend, and then drew a couple of trend lines, and then threw on a 10-day moving average, and that's not part of my swing trading at all. But for purposes of identifying, you don't have to be some super sniper swing trader to identify a longer term trend. Yeah, you won't catch, in the 60,000 range of taking profits, but you might have caught in the 50,000 range or something like that. So, keeping it more simplified for everyone who maybe doesn't have time to become a swing trader. You want to look at it from an investing standpoint. The purpose of that was to show that, hey, maybe not try to pick every single bottom, let it bottom out. And then when you see these really slow moving, longer term trends on the monthly chart and Heikin-Ashi flipping red and it's crossing that trend line and a slow moving, 10 moving average on a monthly chart, making, switching back up too, that would be a higher probability that the bottom is in and the next run's going to happen to the upside, right? So that was the purpose of that. And on that post that I did, you can get TradingView for free. The Heikin-Ashi, you can switch that for free. You can do a moving average for free. So and draw a trend line all for free, right? So all of that can be done on investing like a longer standpoint, and keep you on the right side. Of course, if you want to drop down to lower time frames, then you should really study, and especially if you're going to jump to leverage like you were talking about earlier, then you should really be experts only doing stuff like that. But that was for the purpose of investors. So I know I kind of rambled there, but I just want to talk about that post that I sent to you earlier today.
Yeah, no, I think I've shared the correct one up in the top. It's a simple monthly chart showing the longer term Bitcoin trend with Heikin-Ashi. It's a great chart. And then I also shared another one you had regarding the Dixie. But I want to throw it to Mr. Kevin. Just in your general view, same sort of question I threw at Jesse. What's your thoughts on what's going on with the CPI coming in higher? And although we did have an initial about $1,000 drop down, and then we came back up, and we're kind of course, still in the range we're in. Do you think this is more relevant due to, I forget who posted it, but somebody posted this idea that the markets and, the major institutions and market makers tend to have they're very data driven. They're very aware of what's going on in the market, and sometimes can sort of price in a move before it happens. So although this data has shown that inflation in a way has of course, increased in the last month in June. We're also seeing that there's starting to be a large reduction in cost of lumber, oil, other sort of things that may likely indicate that maybe we have peaked in inflation, maybe it's coming down. What's your sort of thoughts, Kevin, on basically what's happening right now with the charts and markets trying to figure out what's going on?
Yeah, so I found it yesterday's action really interesting because the CPI came in higher than expected, and then we saw the odds, the Fed funds futures, basically the odds of a 75 basis point hike went up to nearly 100% yesterday. And I haven't checked it today, but last night the odds of a 100 basis point went up to 83. That was last night. Could be higher now. I got to check. So the market is very, very certain that we're going to get a 100 basis point hike. And even with that, even with the CPI coming in higher, the market being confident in a 100 basis point hike, still not much happened. The stock market didn't really do much, not much of a reaction, very neutral. Futures were neutral. Bitcoin was pretty neutral. It even had a little bit of a bounce. And to me, that was very interesting. And it actually gave me some confidence that maybe we have actually seen somewhat of a big enough pullback in the market for people to be confident enough to be buying again, and that maybe this was kind of being priced in. I find that to be quite possible. I do, of course, still err on the side of bearishness. We're still within the downward sloping trend line. There's just so many. We haven't actually broken out of our downtrend yet, right? So we have to err on the side of bearishness until we actually get a true trend shift, which we haven't gotten. If you're going long now, for the long term, that's totally fine. Long-term accumulation here, I think that's great. It will likely end up being great. But if you're going long for a trade here, I mean, it's a little bit more risky because we don't have confirmation of a trend shift. But that is what I posted on my Twitter about the 50 level on the RSI on the daily. That has been our biggest pivot for Bitcoin's price in all trend shifts. So if Bitcoin pivots above the 50 level in daily RSI and gets continuation above it, that's when we can look for an actual trend shift. Right now, it's just acting as resistance. But
No, I mean,
yeah,
you nailed that. I mean, I even did a tweet earlier today, and for anybody that's listening here on the Twitter Spaces, if you expand this and you can look at not only people that are listening or talking at the top, but there's charts that we're posting up there at the top as well, and we're trying to share the charts that the different guests, the panelists are speaking about. But I did a tweet earlier today, basically just said, watch out for the traps, because so many people, because we're low, that are bullish at heart, are thinking they just keep trying to catch that bottom and then getting liquidated. And same thing, people are like, no, the bears are saying, no, we're going to go lower. So they throw in their shorts. And then the market is just kind of like CrossFit or any of the other exercise things where you see people in the gym swinging the rope up and down back. That's essentially all the market's doing right now. It's just liquidating the hell out of people that aren't practicing good risk management, which right now is shocking to me because of everything that's going on with this massive contagion in the market from these major institutions like Celsius and BlockFi and Voyager and all these things, where Three Arrows Capital, where it's an exaggerated exponential example of poor risk management, and people are still putting their assets at risk, when right now it's just, if you're going to spot trade, fine. If you're an absolute pro, go ahead, leverage trade. But most of the people out there, about 98%, it's not the time to be throwing risk on all your assets on the line by trying to catch a bottom. But I want to throw it to Jesse now. I think he has a comment on that as well.
Yeah. So real quick on just kind of piggyback on what Kevin and you were saying, was that I saw CBNC Fast Money. One of the analysts was saying that he thought that he would project that the Fed's fund rate would go up to about 3% by September because of 100 basis points hike here, 75 to 100 on the next one. And that kind of follows, like, I know Caleb has done a lot of research on this as well. On the 2-year Treasury is over 3% right now. I'm not looking at a chart, like I said, I'm traveling, and the Fed's fund rate was like 1.21%. So the chart that he showed, that I posted about it as well, it has caught up to the 2-year Treasury in the past. So will it catch up this time as well? So it doesn't always mean that it will. So if the rates are going to continue to increase, to me, that kind of signals that they're expecting CPI to remain high, the prints to remain high, and they're going to try to keep raising rates to bring that down. So from that standpoint, if other analysts are projecting that, and it's kind of lining up with a 2-year Treasury of 3%, then it seems like they're still trying to battle that out moving forward.
I know that's a super good point, and I want to throw it to CryptoVet. We haven't been able to steal his microphone to allow him to speak the last couple times because he's been running around. But curious, CryptoVet, I know you're involved with a number of different projects. In terms of what's going on right now, outside of charts, outside of some of us are belabored by looking at 15-minute charts all day long, or hour chart or 2-hour chart. Whereas others that have a more macro view are looking specifically, at the larger trend and not worried at all about these very small price actions within, intraday period. But being the fact that you're on the entrepreneurial side in the blockchain space, are you seeing any sort of decrease, or is it fairly sustained sort of amount of vigor and energy and even liquidity in terms of basically building the projects that are in this space? Has there been any change in that sort of dynamic?
That's a absolutely great question, and I appreciate you letting me come out of my corner a little bit. I try to hide back here and post all the tweets and announce everything. So I definitely love hearing everybody's insight. And if I had something to add at the time, I definitely would chime in. But I'm just excited to be here. And the really simple question or simple answer to what you said is people are just as scared on the business side as they are on the retail side that you're seeing here. A lot of the projects that we're building, we've been in 1 year long contracts with them, and we're getting towards, the end, or we've had delays, things like that. And, just like the money on the actual crypto markets and stock markets is decreasing, right? That liquidity is decreasing along with all the tech companies, right? Especially ones that were overexposed in crypto. Now, I said, luckily for me, I was so busy with this stuff. I had most of my money off of these different exchanges like Celsius, Voyager. All of mine was self-custodied. I had it all on my ledgers, and I was so busy doing other shit that I didn't have time to trade. And then, kind of bring it back to Kevin's point and Jesse's point, when I was trading more on the short term, like, the 15-minute chart, we used to joke on the Twitch channel that, you can make any chart kind of fit your narrative, right? You can pick the 379-second chart, right? And if you find a breakout on that, yeah, you might get some sort of gain, but you would have to know when to exit at the same time. So just like Jesse was saying, you got to have the macro picture. You can be the sniper, you can dive in and you get all these little bitty trades, but you also need to back out. And like Kevin was saying, if you come into the markets right now and you buy a bunch of Bitcoin, yeah, probably 3 or 4 years later, this probably was a really good time to buy. You're probably somewhere close to the bottom. Even if this isn't the bottom and we drop down to 10, how long is it going to stay at 10? It may only stay at 10 for, 30 days, less, 10 days. And will you actually be able to buy during that window and capitalize during that? Or, the whole strategy of DCAing and just buying as you can and going with the long-term narrative. So, right now, businesses are scared just like retail, and it's going across the board. Potential new customers for new projects, a lot of those have backed out because, hey, we don't want to put extra capital towards Web3 inspired projects, or we don't feel like that's going to be a big enough driver of revenue back towards us. Or the classic one I get is, oh, well, once they start regulating, you won't be able to do this anymore. And that's just from pure uneducated knowledge of the space and how it's going to progress. So, kind of what to do from here. We have to wait for everybody to kind of feel better in the space. And I'm not sure what that catalyst will be. There's, like I said on Crypto Jeb show the other day, we're going through kind of a restructuring. People call it the Great Reset. Where we at right now is in a state in the U.S. specifically, low unemployment. We are not producing much GDP, and we have a huge state of inflation. So in this case, I called it stagflation, found it on the internet from a bunch of other stuff, but it's just a blending of two things that shouldn't really happen together because the Fed says they can control that. But it's a false narrative that they're pumping to everybody. Just so, like Kevin said, nobody really gave a shit that it was 9.1 because they were pretty much expecting it. But I don't know, Kelly, what do you think?
No, I mean, I completely agree. The bizarre factor that we have right now is it's not like this is unique to one nation state in the world because of the pandemic and the the global economic shutdown essentially for nearly a year, in some regions longer, some regions a little bit shorter, but on the whole, the large part of the globe and the major powerhouse. World economies, Europe, South America, the U.S., Asia, have just been fighting this. And the interesting thing is they all took a slightly different approach. So is the Dixie, rallying hard as hell right now? I'm actually going on a trip tomorrow to Barcelona. I'm doing a 3-year delayed honeymoon. And it's, we mistakenly changed some fiat US dollars to euros about a month ago because we found a spot that had a really good exchange rate. And it's funny. Now we're not even going to spend that. We're just going to put in a drawer. We're just going to spend our actual US dollars while we're there because the rate has changed so much. And so, the US actually ended up turning on the money printer first. And then the economy just, rocketed to the moon, falsely propped up on this basically inflation fueling sort of money printing. And then other countries started doing that. But then we also have been attacking in the smallest way possible, but larger than most other nation states in terms of interest rate stuff. So it's going to be very interesting to see globally how these different things interact with each other over the next 6 months. Especially with our midterm election cycle coming up. And, people wonder if this might be your first time here on Crypto Answer. Why are we talking about global markets and inflation and CPI and this other stuff? Well, all this stuff is proven to be having enormous impact in terms of Bitcoin, because is it supposed to be a hedge? That's not specifically why it was made. It was made for, you know, a purpose that people attach this idea to it. And the truth of it is, it's a major asset class in terms of comparatively where it was 6 months, not 6 months ago, 6 years ago, 12 years ago, when it started 13 years ago. However, it's still such a small speck of like a molecule in the grander ocean that is the world economy. And so it's still very tied to these sort of ideas and psychology. And with that being said, I want to throw it to Mr. Jesse. I know he's going to have to bounce off here in a second. And after we bring him up, after we bring him on, we're going to be bringing up Crypto Signals for some thoughts here. But it looks like Jesse had to pop off. So we're going to go straight over to you, Mr. Signals. And curious what you got to say, add, ask, whatever. Thank you for joining, and happy to have you on. Looks like it's trying to connect.
Man, I had questions for Jesse, but he Irish goodbye to us.
Yeah, he must not have
He did that on purpose.
But how you doing, Crypto Signals? Thanks for joining. What's your thoughts? Crypto Signals, are you with us? Just make sure on the bottom left to unmute yourself. Crypto Signals, are you with us? Hello. All right. Well,
Bottom left mute. Yeah.
While they're figuring that out, Kevin, what's your thoughts on what we've been talking about?
What were we talking about? Oh yeah, I mean, an interesting thought that popped up when you were talking about Bitcoin being a small piece of the global pie and all this is another thing you got to remember is that currently, Bitcoin, it is a hedge against inflation. I would say, like, even if we've given it that, it has proven to be. Though what's interesting is that it has temporarily failed to be because we had the CPI at like 1 point something in November of 2020, and Bitcoin has retraced back to the levels that it was at when the CPI was at like 1 point something. So it's interesting to see that. And it kind of made me realize that even though, yes, Bitcoin will outpace inflation in the long term, it is also currently just a speculation vehicle, and it's a product. It's a really good money-making product to sell for these companies, like whatever, Binance, Coinbase, Crypto.com. It's a great product, and they can make absurd money on fees and all of these things. So we have to keep in mind that it is still in that speculation phase where eventually, when the market cap gets high enough and it's more so being used less for speculation, probably likely going to be due to regulators stepping in. When that comes about, then the price will kind of most likely be a little bit more stable, be a little bit more actually sort of like digital gold, where it'll be ticking up and down a little bit slower. Right now, it is still a speculation vehicle, and we got to keep that in mind.
Oh, sorry about that. I was sending a message to Crypto Signals.
That's kind of a thought that came to mind when you said that earlier. But
no, I mean, it's like everybody wants it to be something. And, I think Matty Greenspan kind of pointed out when he was on as a guest in the past, this market isn't being held back by anything or supported by anything. It's a market. This market is a beast, not only the Bitcoin market, but the grander market that it's part of the context in. It's going to follow some things sometimes, and it's going to have strong correlation, and then people are going to bet on that. And then the second that becomes the overwhelming sort of narrative around the market, specifically in this case, Bitcoin or Ethereum or whatever we're specifically talking about, the market has a way of enticing people into this idea of, the perfect correlation, and it's traded. And then those sort of patterns or historical trends that we're saying this always happens, they get broken. And then, then people say it's a manipulation, it's a trap. And all these things are just unnecessary ways to announce why we think we're a victim. And it doesn't serve us. It doesn't serve our profits. It doesn't serve our bottom line. At the end of the day, the number one thing you have to do in this market or any market is remain addicted to data and remain adaptable into how that data can be interpreted and how it's going to play out. Because many people have access to the same data we do, and people look at it in different ways. And it's going to always surprise us in ways that we can't imagine. But
Right.
go ahead.
Yep. No, I was going to say that yeah, a lot of people they do use that, like they blame something why they're a victim, but and it's true. You got to be addicted to data, and you got to go with the data. And what's interesting is, like, just a couple of years ago, I was very heavy on the idea that, guys, Bitcoin is correlated to the stock market. It is following, the trends of the stock market. And back then, everyone really disagreed. They just called me like a hater and all this stuff. I even had like a debate with Al Pompliano on Twitter about it and stuff like that. And some people still cling on to this idea that it's an uncorrelated asset. But it's interesting to see that everyone has come around and basically most people now go, well, yeah, duh, of course it's correlated. And it's so funny to me to see that happen. Just a couple of years ago, it was a huge topic, and now it's just like common knowledge, right? But anyway.
Well, it kind of brings me to this point, back when I used to, early on when I was watching, every bit of crypto YouTube I could find, a few years ago, one of the things I always thought was funny is this narrative is the same thing when you think about altcoins or favorite coins or the only coin you hold, in the sense that, like, somebody would pose the question, which coin do you think is going to? And the truth is, when you start seeing all the comments that people, that what they're suggesting is going to fulfill that answer that you asked about. In reality, when you look at about 98% of the coins people are listing that they think are going to fulfill that role, there's about a 0% possibility any of those coins people are suggesting are going to do that. They're just suggesting the coin that they are invested in, even though it's not relevant to the topic that you asked the question about. It's just this tribal nature that we have. Rather than looking at the data, they're looking at their emotions and their hope for the projects that they're invested in. And the same thing's true with Bitcoin. As much as I do think Bitcoin is the absolute best asset in the crypto space, so much so that I think of Bitcoin and crypto market somewhat separately. Bitcoin, it's also, we have these ideas and these hopes and these aspirations for what it could do. At the end of the day, we have to see in every moment how it's responding, because it's playing on those emotions of people. But with that, I do want to start bringing up some guests on here. And first one we're going to be bringing up, sorry we couldn't get Crypto Signal on. We'll be having him back on in the future. But I want to bring up Crypto RL, he's been a guest on the show, actually, and he's been listening for quite a while, and I'm happy to have him back on. How you doing, Mr. Crypto RL?
Hi, Kelly. Can you hear me?
Absolutely.
Yeah, great. And
if I'm not mistaken, you're all the way from
Pretty late.
Yorkshire, right?
yeah, all the way from England, so quite the world away. But yeah, there was a couple of things that I sent you on Messenger. I don't know if you've had a chance to upload them to the space, have you?
Oh, they're right above.
Oh, they're right above. Yeah, I mean, it's just a fractal from 2015, the bottom of 2015, and it's something that I've been watching closely because I've been seeing so many comments recently, about this is a bear flag, this is just another bear flag. And all I seem to be hearing is this is just another bear flag. And everyone's shorting. And it would not surprise me, at the least, to see a nice little short squeeze to the upside right here. And if you can see from what Kelly's put in there, it's pretty much sniped the bottom of that move and put myself into 8% profit straight away. So I've decided to take a couple of bits of the profit off the table straight away, as you do, just a bit of risk management. But I'm keeping the rest in for this trade because I'm feeling it, to be honest with you.
And that's a great reminder to everybody too. Like the people that make money over time in trading are people that are not fearful of taking profits along the way. Every trade that I've ever eventually lost, I was in the profit at some point, hoping for it to go higher. And then as it started to drop, I'm like, no, it's going to reverse. And then it actually fully reverses against me, and I completely in a loss. And it took me a couple of years to realize, no, when you set your trade, you figure out what your targets are ahead of time, minimum of 3. where you have your safe take profit, and then your little more ambitious one, and then your third one you might let ride. But in that case, you always move your stop loss into profit as soon as you're able to. So even if it does reverse the other way, you're not in any loss at all on the trade. So that's a great sort of point.
Yeah.
What are you seeing right now? Are you only trading Bitcoin? Or are you looking at Ethereum? Or are you waiting for Bitcoin? Are you waiting for the trends to kind of resolve to the upside before you start getting back into alts?
Yeah, recently I've been making just a bit of spot purchase H bar, to be honest. I really like the zone between 3 cents and 6 cents for H bar as a long term play, because I think if what I'm seeing in Bitcoin comes to fruition, I'm sort of seeing H bar outperforming, just on the fact that the H bar BTC chart is giving me a couple of signals that it might be even if it's not at a low, it's definitely looking like a local low to me. So yeah, just a bit of spot H bar recently. Not much Bitcoin, a little bit of Ethereum, but in the long term, yeah, I'm just accumulating at these levels. Spot, not much leverage at all.
Oh, right on. What, Kevin? Are you making any? Are you sitting on your investments right now and just waiting for things to resolve with a clearer trend out of the range we're in now? Or are you doing some small range trading right now with
I'm
any favorite
Yeah,
pairs?
I've actually been more so just testing different types of trading methods recently. Trying to kind of just upgrade my skill set. Basically, just going on Google, YouTube, looking up different traders that have basically like won trading competitions through their methods, and then I'm basically trying to take that, implement it, see how it goes. So I'm sort of in an experiment. While the market's kind of boring, it's kind of nice to be able to just experiment a little bit, and that's all more so day trade, swing trade stuff, which is something that I've slowly been building my skill set on. But other than that, yeah, I mean, just slow accumulation. I also don't really feel much of a rush right now to like hop in, because I mean, we all know how this usually plays out. Of course, I can't say it's guaranteed to play this way, but we're likely going to have several months, even if Bitcoin snaps up, like Faded was saying. It would just, I mean, it could. We're at like a downward sloping trend line. We're near the 50 level in the daily RSI. If we get above that, it probably would snap up. But even then, we'll ride that up for like a month or two, come back down, and there will probably be more than enough time to accumulate. An instant recovery to the moon is unlikely. So I'm just in the point of slowly accumulating, trying to do some research, upgrade, basically just get more knowledge.
You made a great point there, and a lot of people don't realize maybe that they haven't had the opportunity to realize this yet. And everybody that's listening to this show right now, wherever you're listening from whatever medium, I commend you, because you're doing what you should do in any sort of investment niche that you're in, is learn more about it and hear dissenting points of view. And one of the biggest, most common things I've ever heard from people that are successful is you build when the business is low, or you build when the market is down. Of course, you're going to build along the way as well, but right now it's not time to you're not going to realize your millions. You're not going to realize those profits. You're not going to realize that stuff until the bull market actually unfolds. But what you can do to make those things actually serve you and make those life changing profits, or have those positions that you just can't believe you have, it's right now. And if you're not able to, or you don't have the knowledge base yet, or the confidence, it doesn't mean to build. That doesn't mean just build your portfolio. Sometimes building is building your knowledge base, exactly like Kevin was saying. Investing time and energy into learning new strategies, trying them out. And trying out a new strategy, by the way, does not mean finding a strategy, doing 6 trades, and either giving up on it or locking it in. It means doing 100 trades on it with the same exact parameters, and figuring out if it works for you. And if that means trading $2, that's fine. But it's going through the motions of really seeing how these strategies, how you interact with them, and how they interact with the market, and if you're able to manage them. So it's a great point you brought up. Go ahead, Kevin.
Yeah, I was going to say, on top of what you just said, it's very easy to get caught up in this notion or this idea that, like, oh, I don't have time. Like, I got to be buying it. I got to be taking my trades. I got to be leveraging up now that because if it's the bottom I want to be in, that's some dangerous stuff right there. And we've all gone through it. I've gone through it. You lose money trying to do that kind of stuff. It's going to take time. And it's funny because if you had that mentality after Bitcoin broke 20K in 2020, 2021, and you're freaking out like I got to get in, and you're just buying all the way up. And guess what, guys? We went back down to where we were, even lower, and all the altcoins are wrecked. So it's like, you think you missed the opportunity, but trading opportunities are like trains. There's always another one coming.
Yeah, and you pointed out another thing a second ago. I forgot I wanted to say something about it, and that's if we do get a huge push to the upside right now, one of the things that sort of defines a market reversal is forming, on a somewhat larger time frame, let's say a 3-day or a weekly, something like that. And for anybody that's new to trading, a 3-day or a weekly are not large time frames. Large time frames really are monthlies, and when you get into a larger asset class, it's yearly, right? But when we need to form an actual higher high and a higher low, and then break that previous local higher high. And so for that to even take place means by definition, we have to get a push, and that push has to pull back. So even if you feel like as it's pushing in this initial push and you push and you missed it, that it's going to retrace at some level. And that's where your knowledge comes in, whether you're using fibs or supports or whatever trading signal or whatever. You have to define that yourself through practice and through learning. But you're always going to get another chance. And sometimes the second chance is a lot better risk managed than just taking blind shots, hoping for it to go up. That's why when you look at that liquidation data, that's the tweet that I have in the top with the about the traps. People are getting liquidated both long and short right now. Every day there's millions of dollars in liquidations both directions because people are taking these huge swings. Just be patient. Let the market show you where it's going, and once it pulls back from that direction, that's your entry into that continuation. But I want to throw it to got another guest coming on here, Faded Alpha. I'm not sure this is the first time speaker on here, so curious what your thoughts are, where you're from, how you're feeling about the market. Tell us what you're thinking. Just make sure you hit the mute button.
Sure. Yeah, I appreciate you having me up. I'm from the United States. I'm more of a long-term investor. I'm not really much of a day or swing trader. Yeah, I look more at the macro side. And Kevin, just by the way, after Bullard and what's his name talked today, they downgraded it from 80 to 43% again for 100 bips. So we'll see. I think it's still on the table, but we'll see what happens. Yeah, and they both came out and said their baseline for July should be 75 bips. But, language is a tool that the Fed uses, so we'll see what happens there. I guess my question is more on the macro term, and opposed to Bitcoin. When you kind of look at the price action, it really looks like it really acts as a high beta stock. And, when you look at kind of its inception, it's had the luxury of, quantitative easing for 10 to 12 years. And it looks like now, we got to pivot to QT. And if the Fed really does stick to its guns, it's got a couple trillion to bring off its balance sheet. It's going to look to raise its real rates up to 2.5%, 3% and stay that consistent. And, I'm worried, I don't think that the past price action could really be the same in this new financial environment. So I guess my question is, what differences do you see happening, in the environment that we're in now with QT and that going forward?
Well, I'll take this first and then throw it to Kevin or Vet. But one of the things that I noticed immediately in this sort of changing of the guard, almost going from QE to QT, is the fact that there was a lot of people, both on technical analysis, but more importantly on-chain data, and I was one of them, that was looking at all these signals, especially early fall into even when we had the first $10,000 or $15,000 drop from the November when we started actually pulling back, starting this downtrend that we're in now. There was a lot of signals looking at on chain, and it was an excellent lesson for me in that there was all these consecutively, like every day I'd look at a different on-chain chart and it was like, we must be at the bottom. It's at this signal. Oh, we must be. And it would just continued. And one of the things I was actually listening to a talk earlier today with TXMC on Benjamin Cowan's YouTube channel into the cryptoverse, and he put, he said it perfectly. So I want to shout him out on this. That on-chain data and really all technical analysis is based on historical data points, right? And so when we look at historical data points, especially on a macro, you hit the nail on the head. You hit the nail on the head, Faded. That we've been in a certain circumstance, a certain macro environment and correlative environment with global markets, traditional markets, that we have not faced the situation that we're in now, which is not only a QT environment but also massive geopolitical nonsense, war, inflation. And so the data points that we look at on chain, and it's made me very reserved on how I look at these, is that although we may be very low, historically low, that this must be the bottom on whether it be reserve risk or entity adjusted dormancy flow or value days. I mean, there's so many metrics that MVRV, Z score, it shows that we are lower on most of these than we've ever been effectively. And does that mean that we're at a bottom? I'd argue obviously not necessarily right now, because we're comparing today's price point compared to historical trends and what was happening with addresses and behavior on chain in a completely different environment. So we haven't defined where the bottom would be in a QT environment versus a QE environment. So it's going to be interesting to see how this all resolves. And that's sort of how I'm thinking about it right now. What's your thoughts, Kevin?
Yeah, I mean, I wanted to ask Jesse when he was here about that chart that he has about the classic 85% drop where it would land us at 10K, and sort of just ask him more to expand on why that is. So, I mean, of course, if you're just going based off of the normal pullbacks, then it would be 10K. But yeah, I mean, that is a good point that you just said about QE versus QT, how Bitcoin has never experienced this type of environment for its history, right? So it is an unknown territory, and I'm really not 100% sure on what to expect. Maybe it means that we would have a deeper bear market with longer term sideways than we've ever had before, something along those lines. But yeah, I forget exactly what the question was.
Well, I want to throw him back in here in a second, but I also wanted to add on Jesse's chart. I was looking at all the targets I had, and I tried to explore metrics and indicators and fibs and stuff that I hadn't yet explored. I started looking, and I was looking at likely 13.5, 14 as sort of the low with maybe a wick below that. But if you actually draw the fib, the golden retrace from basically the 2018 lows, once we fully capitulated up to the 69, right, I think it's right about $10,000 is that golden retrace. So that was kind of an interesting confluence there. But throw it back to Faded now.
Yeah, no, I appreciate that. And yeah, one of my biggest concerns is, if you take a look at it, it really started to springboard up and, hockey stick right around November 2020. And if you look back, the U.S., as much as we love it, printed 80% of the currency in circulation in the past 2 years. So if they could turn the printers off for an extended period of time, that is my biggest concern, with kind of like this type of stuff. And I had one other point, but I completely forgot it, and I'm sure it'll come back to me. But yeah, no, I'm super worried about the macro. This CPI report, if you look at core CPI, I think some of the numbers are a little fuzzy. So, we'll see what happens. But
yeah. Well, to the point of the money printers, of course it puts us in the absolutely terrible position right now. And there's a lot more that should have been being done really for the last 15 years or more. And it just obviously went completely haywire with the stimulus and expansion plans and all the money printing we did in 2020 into 2021. But at the end of the day, we are in a sort of a debt-based fiat system, and so at some point the Fed is going to need to turn quantitative easing back on. When that's going to be, it could be later this year, it could be sometime middle of next year. But because if they're unable to pay back their debt because interest rates go absolutely through the roof in terms of the debt interest, that would put us in a worse position than we're in now. Mr. Vet, you have any thoughts? Any thoughts on this?
Yeah, I have a couple. And in the end, it's not anything good to say. It's just, it's stating the obvious and everything that we had. And just like Faded was saying, unfortunately, we printed all this money, and now we're in a shittier position than we were beforehand. And now, kind of, the only way to get out of it is to print more money. So that's what I see them going at, because that's pretty much the only way the Fed knows how to do anything. Kevin mentioned earlier that Bitcoin is a hedge against inflation. It for sure is, if everybody is using it as such, right? Because until Bitcoin is measured only in the value of, say, Bitcoin and not US dollar or British pound, whatever you want to actually compare your Bitcoin to, it is still right now, in its infancy, and the Fed is still in control. Quantitative easing is going to happen again. This is probably when we'll have our next little pump going up. Gavin Newsom in California has already given away money for gas relief, right? So at some point, only so much pain is going to happen. The narrative is building right now. What's the best way to kind of fluff off a bunch of random money and spending? We have the war in Ukraine and things like that. But I don't want to go down a tinfoil hat route here. We're getting to a point where, at some point, something's going to break.
And I was listening to Wendy O talk on the Crypto Jeb show today, and she had the best characterization of it ever. This sort of stimulus money, not only California, but even the stimulus money that we got, a year and a half ago or so, but especially in California, is it really even? I mean, all of us know, given somebody that makes $75,000 a year, $100, that's not relief. So she characterized it as hush money. It's more like a ticket for those government officials, the politicians, to say, to look like they're doing something to help, but in reality, we all know, based on what's happened from the previous sort of massive sort of printing that went on, it's actually it's kind of like putting a 2-inch band-aid on a 7-inch gash that's 3 inches deep on your leg. Well, that band-aid's not going to do anything. You might feel special because a pretty girl put it on your leg, but 15 minutes later you bleed out and die. And that's kind of the situation that the government and the Fed and our balance sheets are in right now. But with that, I want to throw it to thank you so much for joining us, Faded Alpha. I'm going to move on to a few more people before we wrap out here in the next 20 minutes. So now we're bringing up Power as a speaker. So yeah, just curious what your thoughts are, what you're feeling, what you're seeing. How you doing, Power?
Hey, what's up,
Make sure to
Kelvin?
hit that mute button.
Hey,
How you doing, man?
I'm doing well, man. Thanks for doing the space. Thanks for bringing me up. Yeah, I just wanted to ask you guys, what do you guys think the institutions are thinking, right? Like, about Bitcoin. I mean, at this point, I think, most of the smart people understand the fiat system, and since 1971, Nixon taking us off of the gold standard. Like, I think that most people, right, like people that are paying attention, smart and wise people, understand that the world needs sound money. What do you guys think that institutions are thinking when it comes to Bitcoin and preserving their wealth and moving forward in this environment that we're in? What do you guys think the institutions are thinking, right? Because like all of our money is losing purchasing power. The U.S. dollar has lost 95% of its purchasing power, over the last 100 years. So in all reality, like, we all know that the fiat system is a real problem. So what do you guys think?
Well, yeah, first thing that comes to my mind is the contagion that's gone through the market right now, obviously, is terrible press for the crypto space and for Bitcoin. And even though this has more to do with institutional mismanagement of funds than it does with crypto, I think for the layman, for the everyday person that hasn't yet taken the dive into crypto, is going to be they're going to have clouded thoughts. I don't want to call them wrong, because they're only dealing with the information that they're getting. However, large institutions typically run as corporations. They have boards of directors. They're responsible to their shareholders, and so I think it puts the adoption from institutions in a precarious place right now. And I would argue that it's among one of the best things that they could do. Not their entire balance sheet, but a good some some portion designated out of their treasury should be invested in, specifically Bitcoin, and if they want to be a little more risky, Ethereum, but no alts. But I do think there's a lot of institutions that are on the sideline, and there's one, regulation needs to be a little bit more clear, and then two, the environment, the speaking, the water cooler chat environment needs to be in a better position, so they don't make a decision and then completely undercut themselves because the majority of their shareholders just hold them to the cross, to the fire. But Kevin, what are your thoughts?
Yeah, I think that's a great question. What do the institutions think right now, I guess, about Bitcoin? Remember that most of us in this space, we kind of worship Bitcoin, and we kind of like put on the labels that we want to put on, like inflation hedge, limited supply asset, like all this stuff that we sort of really put it on a pedestal, and which, I believe most of those things too, but the institutions clearly don't, right? They think of it as more of just a speculation tool. Like if a fund can pull out a 30% Bitcoin, they're going to get out, right? And that's kind of how I think they're just using it for speculation, knowing that they can utilize the volatility and pull some epic gains in the short periods of times out of it. And they're not under the hodl mentality. Because if they were, we probably wouldn't be so low in price. If they saw it as an inflation hedge, we wouldn't be at this price. So I think they're kind of avoiding it right now. I mean, of course, there are the more crypto-focused institutions. They're different, right? They're always interested. But the Wall Street institutions are probably sort of hands-off right now, most likely. And the truth is, if an institutional Wall Street has Bitcoin, and let's say they need to free up cash, what are they going to do? They'll probably drop Bitcoin like a hot potato first. That'll be the first thing they drop, because that's sort of the outcast asset. Something that's kind of how I think institutions see it. Again, more of a speculation tool. We can't expect institutions to be like, oh, hodl to the moon. Buy when inflation's going up. I mean, clearly none of that's true. Again, if they get 100% gain on Bitcoin, that is more than enough, and they're out.
Yeah, I agree with you, Kevin, like 100% on that. And kind of going back to the fact that, there's speculation and, if there's a chance to be making some money, they kind of want to have a piece, but they'll drop it at a moment's notice. Kind of what I've been doing now, and especially on the SPARs, I'm advising a lot of companies, especially if they want to move their balance sheet over, because personally here at our company at PennyFly, we have Bitcoin on the balance sheet. And that is just kind of, our provocative towards the long term, the macro fund, right? But if we were discussing with another company who's trying to do this, the problem with that it's kind of a love-hate relationship with crypto. A lot of the big money, or at least that I am friends with, they absolutely don't like crypto because one, they don't understand it. Two, they don't really know how to be a part of it. And then the main thing is goes, who's going to take care of me like later on, right? Like, how am I going to get real estate? How am I going to move to get tax credits for this? Some of them are working on like $10, $15 million, like 2050 carbon credits that they've gotten from like Elon Musk and different companies that have put these different things out, right? So in the end, that's where they can guarantee money, and it's safe because it's backed by our crappy fiat currency, the US dollar. What is the motive to go to Bitcoin at this time, right? It's okay to kind of play with it and kind of be the speculation of it, but in the end, it's not what does business for them. So until there's a much larger scale adoption, I'm on Kevin's side here. It's like we're gonna have to just kind of like wait it out for the long haul here. And institutions, they know about it. It's there, but it's not enough for them to kind of jump and make the jump over, in my opinion. But like Power, it's a very, very, very good question. I'll let you have it back, Kelly.
No, that was actually honestly that was a great question, Power, and I appreciate you. I think you've been on here before, and we had you up, so always asking good questions, and we appreciate you. We appreciate everybody that's tuned in here on Crypto Answered. I just want to take this moment and just say thank you, everybody, for tuning in, and definitely give CryptoVet at CryptoVet underscore Kevin Svensson at Kevin Svensson underscore. Give them a follow on their pages. They put out incredible content. Jesse Olson was on here earlier. We got Matty Greenspan's listening. He can't join the conversation right now, but absolutely wonderful mind, and just all things finance and crypto and investment. He runs a wonderful group called Quantum Economics Group, Quanto Economics Crypto. It really, he's got some great stuff. So definitely give him a follow too. That's at Matty Greenspan, Mati Greenspan. But with that, I want to throw it to send it off to the next person here. This is going to go to Jay. And thank you again, Power, for everything you had to say. And now we're going to send it off to Jay. And curious what your thoughts are, and what you're feeling, or what you're wondering. Just unmute yourself on the bottom left. Jay, are you with us? If you're speaking, we can't hear you. You just gotta unmute yourself on the bottom left of the app. And if not, we'll continue on. But while she's figuring that out, Kevin or Vet, is there any other things that you're seeing going on in the market right now that are piquing your interest, or maybe things to watch? I know there's some dates coming up. Kevin, maybe you'd be aware of these. Some dates that are coming up here later in June that are, some sort of economic news points that are coming out, meetings. Is there anything that you're sort of waiting for to actually, they're on your radar and you're waiting to see what comes out of those meetings?
Well, which ones are you talking about specifically? Because I'm not really looking for all too much, just waiting to see the Fed, really.
Well, we got the minutes
what do you
coming out.
got on your calendar?
I just, from the top of my head, I think we have the minutes coming out in a couple weeks from the meeting that obviously they just determined they have to determine the CPI, and then there's the minutes from that, and there's a couple other things. Let me pull up my calendar. But just in general, is there anything that's on your calendar in the next few weeks that you're excited?
No, I'm also kind of
there's a lot of earnings reports coming out.
I'm kind of more like Jesse in the sense that, like, I kind of more so just stick to the charts and the data. Like, I'm not, I'll follow the bigger events, but not so much not really doing much other than just keeping an eye on the charts. Because the charts kind of tell you everything you need to know. But because a lot of these events a lot of the events that you're talking about can create like trend shifts, right? And then they show up on the chart, right? And then and that's all that I need, really. But
yeah, right. That's definitely a good point. Well, if there's anybody
we need to
else,
get Markets and Mayhem on here. You'd be that guy.
Reach out, send us a throwaway message. I'm happy to always expand the panel and bring on new people. Some people I don't have access to, because sometimes it's hard to reach out if you're not already connected with them, because it'll go into the not read folder on Twitter. But yeah, I'm happy to bring up anybody that can add value to the listeners here. My whole point here is, one, I like to hear other different people's thoughts in the space, different people's methods and strategies, what different people are watching or seeing, or, it's really amazing sometimes, I'll have 4 or 5 different guests on in a show, and, each one will have a clear outlook that's completely opposite of the other person. And it's important for all of us to hear those varied viewpoints and varied lenses through which they're looking at the market, and different things that they're maybe preventing, basically managing heavier risk on, or maybe they're being more bullish and taking shots a bit faster. So it's important to hear there's the variety of things. But with that,
I was going to say that having a team is so important, because specializing in one specific thing takes up all your time, and it's so important to have groups that you talk to, that you communicate with, somebody else that specializing in one other particular thing, come together, share the knowledge, and that's really the key, because you can't do it alone. It's nearly impossible. This is why everything's being automated nowadays.
Yeah, isn't that the truth? But if I know we brought Jay up to speak, I'm not sure if she's having issues with the mic, or maybe she's not on mobile, because this only works if you're on mobile to speak. But if anybody else has anything they wanted to add, questions they wanted to ask, thoughts, strategies, anything that's piquing your interest in the space right now, or like I said, questions for any of us up here, we're happy to have you up. Just on the bottom left, request to speak. We're going to be going another 10 minutes or so we could probably bring up another two people or so. If there's anybody else that wants to hop on stage, so there we go. We got DG. All right, DG. Hopefully your mic is working, and just let us know what you're thinking and feeling and seeing or wondering. I believe in you, DG. There we go. DG, is your mic working? Because we can't hear anything you're saying.
DG is upside down.
Can you hear me now?
What's going on, Maddie?
Well, yeah, DG, we can hear you. You just got to talk now.
Oh, okay, cool. So as far as the institutions, the big money that's in Bitcoin right now, how much money do you guys think is in there that's just trading, not actual Bitcoiners? That's a hard metric to pull out. But I think there's I mean, if you look at it just through on-chain metrics, looking at large, like institutional sort of size whales, 1,000 plus or 500 plus Bitcoin, the large majority of the market is still actually retail, surprisingly, which is beautiful for decentralization. But the difference is the big money, when they make moves with hundreds of millions or tens of millions leveraged. Small leverage, but if even if you do a 3x on $50 million, that's $150 million movement in the market. Placing a put or a call into the market. But Maddie, I know I appreciate you hopping up, but Maddie, do you have any thoughts on this? Because I know you look quite deeply at the data. Do you track anything regarding institutional sort of involvement with the space?
Yeah, man. I mean, when big money is involved, I mean, you can just kind of smell it in the air. You can see it in the volumes, and I think that we had a lot of that, all throughout. Well, towards the tail end of 2020, all throughout 2021 and 2022, I believe that they were probably the biggest dumpers. Like you said, it's a hard metric to pull out, but I would say that it's not. It doesn't. There isn't the type of thing really need to quantify. You can just kind of tell they're happening by the institutional players who are saying, "Hey, I just aped," and we could probably we were keeping a list at Quantum Economics for a while. We had a comprehensive list of all of the institutional money managers who had gone Bitcoin. So, I mean, just keep your ear to the news, and that'll pretty much give you a good picture of what's happening.
Yeah, no, I agree with that full heartedly. And I think it's also important, even like with this downtrend right now, a big part, and at the end of the day, it doesn't really matter why a trend is going one way or the other. You're playing, if you're trading, not investing. If you're investing, you're taking much larger macro swings, and you're not looking at you're not probably even looking at the daily chart. You're looking at the weekly chart and checking in with it, once or twice a week, because you're not giving yourself a heart attack tracking stuff. But this large sell pressure has a lot to do with this contagion from Luna, and I don't want to talk about Luna specifically, but there's a lot of institutions that were poorly risk managed. So there's a lot of assets that got called and basically pushed the market down.
Yeah, I accidentally left my chart on the 15-minute chart. I almost gave myself 3 heart attacks, honestly. Don't do that.
Funny.
Don't do that, people.
Go ahead, Kevin.
Yeah, I was going to say that if the question is, what institution are Bitcoiners? It's probably not many. And you probably already know the names of the ones that are. And for the rest, cash, fiat, that's their god, for the most part.
Yeah, and you can Google it too.
Yeah, but Bitcoin has this special way of attracting people for the money and turning them into diehard libertarians. So I think that also applies to money managers on some level. I don't think that their hearts beat any differently than the rest of us.
No, I think you're right, and I think you can. I don't know if this is true globally, but I know in the States, for any institution that makes an investment in anything, they basically have to declare it, and that comes out basically quarterly. So a lot of these institutions, it's actually it's a surprisingly longer list than I would thought it would be right now. But I think in the next 5 years, it's going to be slow over the next year and a half or so. I think, but I do think in the next 5 years we will start to see a bit of a stair stepping up, not necessarily parabolic, but we will start seeing a large increase in corporations and institutions, uh, allocated to crypto. What are your thoughts on that, Kevin?
Yeah, I mean, I guess Maddie's right in the sense that their hearts don't beat differently than us. I mean, it depends. I guess it really depends on who it is, who the entity is, where their values really lie. But it's true. Over time, they will likely be converted, um, and they already are. I mean, slowly and slowly, we see so many people flipping their opinions. Even Michael Saylor himself, not that long ago, has like tweets saying that Bitcoin. Hold on, did my phone just? Yeah, no, we're good. That Bitcoin is like some kind of gamble thing, right? It's just gambling, and it's never going to last. And he's converted and now he is a true Bitcoiner, 100%. So yeah, I think for sure that institutions may over time be able to be converted, right? But we will see.
Yeah,
Kelly, just for you, I dug up the list, which was last updated August 3rd, 2021. After that, we just abandoned the list. Fund managers are bullish on Bitcoin. Paul Tudor Jones, Bill Miller, Stan Druckenmiller, Julian Emanuel, Alliance Bernstein. Institutional on-ramps including Visa, MasterCard, and PayPal. DBS Singapore, Stuttgart in Germany is creating a digital assets exchange. S&P Dow Jones launching cryptocurrency indexes. BNY Mellon, Elon Musk adding $1.5 billion to Tesla's balance sheet. Ray Dalio finally sees the light. One River Asset Management reveals crypto position of $1 million. Anthony Scaramucci, Jim Cramer becoming a outright flaming Bitcoin maximalist, and then reversing course and going towards Ethereum, as Jim Cramer does. Niall Ferguson, Fidelity Asset Management recommending 3% Bitcoin allocation for their clients. Guggenheim Investments, Jefferies Investment Banking Company, Mass Mutual, Kevin O'Leary will allocate 5% if there's an ETF. Obviously, Kevin O'Leary since then has become a huge DeFi buff and wants everything to do with staking stable coins. Larry Fink, the CEO of the largest bank in the world, BlackRock, had very positive comments. And then the list goes on and on. So that's basically where we were at back then. These days, I think that all of those people have become somewhat converted, but as people tend to do, they're going to be looking for good prices and good deals, and they're not going to want to get in when the market's going down.
No, I completely agree with that. That's great list. Thanks for bringing that up. And I feel like your kids in the background are probably looking at one of the charts on the 15-minute time scale. They sounded as frightened as you were.
My 3-year-old is a better analyst than me.
But Kevin, I know you had something you wanted to add.
Yeah, I was going to add real quick. Yeah, like the list is huge, and it continues to get bigger. But I think a lot of these people, especially like more of the bigger institutional names you mentioned, I think they're just opportunists here, seeing that like 30-40% of millennials are buying crypto, owning crypto, and they're just like on the money train, like, oh, we can sell this product, we can make money on this product. I mean, it's just a great opportunity. So I wouldn't necessarily mistaken them for being like true crypto Bitcoiners, and more so just opportunists going with the trends, seeing what's popular, seeing that there's a flood of people looking to get into this stuff, knowing they can make money on it. But of course, it's a mixed bag. That whole list right there, I would say, the individual people are likely more so true to what they say, but the big names I'm a little bit more skeptical of. like the institutional names.
No, I definitely hear that. But again, before we wrap out here, I want to thank everybody, the panelists, CryptoVet, Kevin Svensson, Maddie Greenspan, Jesse Olson, who was on earlier, and also all the people that hopped up on stage and lended their thoughts or questions. We really appreciate you. We're going to be wrapping out here in a second, but before we do, I want to actually just throw it to Maddie Greenspan with the final question. With everything going on with the economy, with the Fed, is there anything in particular that you're watching right now to signal that there might be some sort of hope for the bulls in the near future, or what sort of signals are you looking at to sort of a little bit of a, maybe not a leading indicator, but a signal that the winds might be shifting?
It's not even a focus of mine trying to find the bottom, to be perfectly honest. There's so many deals of mergers and acquisitions that we're involved in, that are consolidation of the market because of the price going down. That, buy the dip, but people who are dollar cost averaging are buying the dip anyways because they bought the top. They're buying the dip. People who are thinking long term don't even sweat if they bought it, 10K, 20K, 30K, 40K. It doesn't even matter if you're thinking 5 years, 10 years out. So if you're thinking about just purchasing the asset, the charts aren't going to help you there. It's just, just keep on your cost averaging, stay humble, stack sats and hodl.
I couldn't have said it better myself. I even put out a tweet. I didn't want to share it in the top here because there's a bit of a graphic image in there of me laying in the hospital with about 9 external fixatures on my body. But attached with that, there was a chart that I put out with if there's only one on-chain metric that you use, because it's quite basic, but it really kind of highlights something pretty phenomenal, and that's the reserve risk on-chain metric. And I charted out basically marking only when it's on my Twitter. If you go to my Twitter at Kelly Kellam, scroll down and look for the post I did about 19-year anniversary. But I marked out when the reserve risk oscillator entered the green zone, which basically means that there's a higher likelihood that you have an asymmetrical risk to the upside than not, and the lower it is, the more likely that the asymmetry is. But rather than trying to do it and mark out where the bottoms were, the actual bottoms on price, and where the oscillator was at that point, I only marked out the moment the oscillator entered the green and the moment it exited the green. When it entered the green, of course, the bear market was still in effect, but it was coming somewhat towards the tail end of the bear market. When it exited the green, the bull market was already in effect. And so essentially I measured out what the level of growth, what the percentage growth was on Bitcoin price at those two levels that basically ignored the bottom entirely. And what it points out is that exactly what you just said, Maddie, that too many people focus so heavily on the exact bottom, or locating the exact bottom, that they actually get themselves in precarious situations, and they take on way too much stress that doesn't serve them. But in reality, if you just use some basic metrics, look long term, and if you buy towards the end of a bear market and it still goes down, it's, as long as you have a relevant sort of time horizon, for growth, which means somewhat macro at least, you're going to be all right. And just DCA, and don't bother yourself with the stress of trying to intraday trade if you're not a trader. If you're not a trader, which the majority of people aren't, most people are just greedy and they try to trade to make extra money and then they end up losing it. Just find those points in the market that, these basic signals, MACD, RSI, the reserve risk on-chain metrics, maybe the MVRVZ score. And just when it gets towards an area on those charts or on those signals that suggest that, things could be looking up, then you DCA and you don't sit there and try to trade in and out. And that's sort of the best sort of strategy, I think, for the majority of people. And too many of us are too greedy, and they try to catch up with people that are already millionaires, and we just end up right where we started. And with that, I think we'll be wrapping out. Thank you again for everybody that's tuned in here on Crypto Answered. Again, my name's Kelly Kellam. You can find me at Kelly Kellam. We got CryptoVet, my co-host, at CryptoVet _ Kevin Svensson at Kevin Svensson _ Definitely check out his YouTube. He puts out stuff fairly regularly with great balanced view on the markets and TA and just thoughts on what's going on in the space. And of course, Matty Greenspan with Quantum Economics. He's got a great newsletter as well. You can check out and you can just follow him at Matty Greenspan. That's MATI Greenspan. But unless you three have anything else you want to add before we close out, we'll wrap it up.
Yeah, I think I'm good. I just want to say I appreciate you having me on once again. I've been on here many times now. It's always fantastic, always learning something new. So I appreciate it.
Thank you. Thank you for spending your time. And thank you to all panelists for spending your time with us and your wisdom and your experience. Really appreciate you all. And with that, I hope everybody gets away from the charts a bit at some point this week and definitely this weekend. Have a wonderful time. Spend some time with friends, family, and big love. I think next week we're taking it off. I'm going on a 3-year delayed honeymoon with my wife, but we will be back the week after that. And with that, I hope everybody has a phenomenal weekend.
Wow, man. See you in 3 years. Have fun.
Yeah. Adios, everybody.
Peace out. Yeah.